First, we start off with FANG biting the dust. The group under pressure today, having a rough February, with the exception of Netflix, Facebook, Amazon, and Alphabet, all in the red as the rest of the market is grinding higher. And the Nasdaq is now on track to snap an 8-week winning streak. So what is wrong with this FANG trade? What does it mean for the broader markets? Guy, can I interrupt your dancing for the show?
You know, I'd say not my favorite Queen song, but I'm a huge Queen fan. We'll talk about that later, I'm sure. I don't think it means anything necessarily to the broader market. I think each one of these stocks, you can make an excuse for. Facebook, self-inflicted wounds. I think there's still downside there. Google, cloud computing, a vast third behind Amazon and Microsoft. That coupled with the fact that maybe regulation is coming down the pike. Netflix has been doing okay. And Amazon, I think people are concerned about valuation and maybe the retail climate is slowing down. So I don't think it speaks to the broader market. I'm sure Dan has views. I think a lot of what's happening is people are rotating into other names.
It most definitely has a huge impact on the broader market. Okay, so despite the outperformance over the 18 months prior to FANG topping out mid last year, they were obviously a disproportionate amount of the gains, and they make up a huge part of the Nasdaq 100. I think if you put the Apple in there and the FANG, you know, those five names were up to 40% of the weight of the Nasdaq 100. So it was an accident waiting to happen. They topped out mid last year. They continue to make lower lows. The fact that you have Apple, Amazon, and Facebook all down 20% from their highs, they can't get going. Look at the equal weight. This is bullish. I know that you guys are saying, if you look at the equal weight, the S&P Tech Index, it's only 3.5% from its all-time highs. But if you look at the New York Stock Exchange FANG Index, it's 18.5%. So here's the thing. There's a lot of stocks that are not mega caps that have been doing very well over this period, right? So that's bullish. But the fact of the matter is you need the big ones if we're going to get back to prior highs.
Well, Dan, I think you're right. This is a group that is fighting for its life here. If you look at Amazon, that 1600 level is the Mendoza line. That is the line in the sand. It has to defend it here. I think what's interesting, though, when you go away from just the FANG stocks, look at Salesforce, look at Microsoft today. Great action there. Look at Adobe. That's reaccelerated up. Oracle's about to break out. So there's more than just FANG, and I think under the surface, tech is actually a lot better than people are giving it credit for.
I think especially if you start going and you add the FANG and you talk about just over the last couple of weeks, and we talk about 6 weeks into the year, right? Apple's done pretty well so far. Netflix has obviously turned it around. They're doing pretty well so far. Yes, there are other names within FANG itself. But you look at some of the other areas where we're seeing some of that growth. I mean, you look at the semis, for instance, and we brought that up again last night. Keep bringing it up because look at the growth that we've seen out of some of those names in terms of the moves they've made off of those lows. They've had an incredible run, whether it's Xilinx or AMD, you go across. Intel today back over 51. A lot of these names have captured and moved back up to where I think they need to be, Mel, to be able to support a broader rally rather than just the FANG names themselves. And I do agree. By the way, Facebook, if they can ever get out of their own way and stay out of the media in terms of anything from a security issue.
I thought they got out of their own way with the last earnings report.
It seemed like they had, Mel, and the stock was up to 170, and then once again, what happened? All of a sudden, there's another story about Facebook, right?
You mentioned,
down to 160.
You mentioned Xilinx, and that's a great example. Yeah. Here's a semiconductor stock that made new all-time highs just in the last month alone, and it did respond to good guidance. But take 15 Xilinx and add the market caps together, and you get a Facebook. And that's my point about the equal weight versus those five names. And if you want to talk about MAGA, because that's what I like to talk about.
So catchy.
It catches up. Microsoft, Apple, Google, and Amazon. I mean, they are the keys to the market here. You've had all this outperformance from a lot of smaller names, and we haven't seen the sort of participation in some of the groups that we'd like to, like banks. Energy has done well, but it's still way off the highs.
You've got industrials, you've got different parts of technology that are working if you go to the broader spectrum. I mean, if we just focus on just those big names, it's funny because there are times where everybody says, well, there's only four names moving the market. And the reality is, look where we are in terms of how far off are we from the S&P, the all-time highs.
Without
all-time, forever highs. And yet you're seeing a lot of these names that aren't participating right now, but you're getting a broader swipe. That I'd rather see.
Who's right, Chris?
Keep in mind, Facebook is 40% off the lows here. It can pause back to 155 and there's no damage done. Netflix has been the star of the whole group. You start to get that breaking out here. I think the FANG worries go away. Amazon 1600 is the big level, but look under the surface. The Oracles, the Cisco's, those are the leadership stocks in this sector right now.
We love talk about FANG. But should we be talking about FANG anymore? Should we christen a new...
We started the show talking about FANG.
I know, but maybe we're too hung up on this grouping of stocks which no longer move as a momentum trade as they once did when the term was first coined.
So we should have sort of the funeral for a friend type thing, like a little Elton John, right?
I wasn't going down that road, obviously, but I can see where you're going there.
But I don't
whether it be MAGA or another.
Interesting about MAGA. I don't know how he gets the MAGA thing, because when I look at it, it's MA, right? I mean, but
you mean MAG?
Yeah, well, because right then it's no longer Google, it's the alphabet. So you might want to change your hat, otherwise you're not going to sell any, number one. Number two, you're right about Netflix. It's had a tremendous run, but you know what? Now Netflix is bumping up against levels we last saw in October. It's doing this whole round trip. I think Netflix rolls over. I will say this. I thought it was going to roll over $20 or so ago, so I have to put that out there. In terms of Facebook, I hear you, it's off the lows, but I think it's headed right back there again. I think the headline risk for Facebook is significant.
Yeah, I just want to make one point. You know, what you just talked about, Chris, is a really important point. We're seeing value outperform growth in technology right now. So you mentioned Oracle, Cisco, Intel. These are all good balance sheets. They're low valuations. They're low single-digit growers. To me, that's actually very defensive. They have, dividends, buybacks, all that sort of stuff. So to me, I don't actually see those things near 52-week highs as actually bullish. I know it shows pretty good breadth, but I don't know how we're going to get to new highs if we don't have MAGA really.
I would push back a little bit. Value working, I think, is the market's perception that growth on the horizon, economic growth, may actually get better from here. When you're buying stocks with lower valuations, you feel comfortable about the future. So look at Disney.
How do you see that?
Look at the improvement in Disney here. Look at the improvement in Comcast. Look at the improvement in Charter.
Those are staples. I mean, so to me, when I'm thinking about tech, if you want to talk about tech, the fact that we're just saying that FANG or MAGA ex-Microsoft are holding on for dear life, but people are in February, late February, are buying up Cisco, Oracle, this sort of stuff.
It's like the tech bunker.
It's a tech bunker. Thank you, Mel. To me, it's very defensive. It's like I got to put my money somewhere. They're acting well. I put it there.
I've never viewed any of those names as defensive. I view all those names as names that when you look at them, do they have growth? Yes, they've got growth. Are they doing everything right? Do they have the right fundamental story? That's why it's always.
What are their valuations compared to the FANG trade?
Oh, well, let's be honest.
What are their dividends compared to the FANG trade?
They definitely have dividends in most cases, but when you look at a lot of these, let's not be too crazy about this. Google, we talk about on the desk all the time. It's not that high of a valuation. Apple clearly is not, and I know that's part of the FANG. But I mean, and Facebook, that's not even that high of a value. So we're not talking about 40 multiple type stocks when we're talking about FANG names overall, except for maybe Netflix.
And Amazon.
But I mean, and Amazon's obviously always been very, very high, but that's also the one that everybody always says, well, but we're going to use a different measuring stick. It's kind of like Boeing. The measuring stick, when it got to a high PE, everybody says, yeah, but it's free cash flow, and then, boy, are they running with cash, which is true. But now it's starting to catch up with itself because that earnings growth has been so high that a name like a Boeing isn't as expensive.
What I would say, though, back to tech, if you were really comfortable in buying Cisco and Oracle and Microsoft and Intel because you think growth is going to, we're going to see a reacceleration in global growth, wouldn't you go for FANG and MAGA with the beta? That's what you would do. You would get the heck out of Oracle.
I think the pushback is you don't need to overpay from a multiple standpoint if you believe growth is going to reaccelerate. Look at today. You had terrible economic data, but yields were up. Transports outperformed. Small caps were in line. That is not the response I think a lot of people would expect on a day where you have a big miss in that data.
What's your take on the tech bunker?
I'm sort of with Pete. I'm not necessarily sure it's a bunker. I mean, Xilinx hasn't been a bunker. I mean, that's been a tremendous growth story. I mean, I understand where you could say a Cisco is sort of a bunker, right? But then you look at Oracle, you look at Microsoft. I mean, these are stocks that have done relatively well. So you can't throw them in the bunker with everything else. Number one. Number two, and I wish I had thought about this before the show, and we could have had a pretty graphic. But, you look at the move in Netflix over the since December 24th. It is paralleling almost to the tick what's going on in the S&P 500. So you go back to October, look where Netflix topped out, look where it went in December, look where it is now. The S&P is now rolling over at this $2,800 level, the same level that it sort of topped out at in mid-October. Very interesting price action, and I would suggest maybe, and Steve Grasso would agree, that maybe as Netflix goes...
This is the key to the market?
I don't know if it's the key to...
I don't know if
I'm not putting words in my mouth.
He obviously didn't give this a whole heck of a lot.
No, I did. I just looked at it.
Well, you just said you just thought of it.
I was looking at it. I do things on like that.